Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it way back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and of course advanced mechanical trading algorithms, which are my passion. Our 21 spine ES mean reversion systems with about 90% winning trades, and of course our amazing KISS systems, which have been live for over a year and a half now. You can see some of the recent trades here. These are ones that had new smart trailing stops generated. None of these are back tested. These are all real trades. Here's Tesla. Currently it's up 34.5% on this trade. And keep in mind that Tesla's only up 1% this year if you bought and held. So it's destroying buy and hold with, of course, protection. You can see all these other nice gains on these various stocks. Again, we run this system on 750 stocks and ETFs. So it's quite different from our spine ES mean reversion systems, which are only run on the S&P 500. So this is run on a ton of stuff. It's really cool. You should check it out. If you're just following on YouTube, consider subscribing. Hit the enroll button. And our best membership is our 6-month subscription, because you get roughly 50% off compared to our monthly, based on a month-to-month cost basis. Anyway, it's been about a week since it's about six days exactly since I did my last YouTube video on Monday. Today is Sunday, July 7th. And this is our back-end recorder for our standard web page subscription service, which I'm going to go ahead and get this recording started now for our subscribers. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a wonderful weekend. It is Sunday early afternoon. It is July 7th, and this is the very comprehensive technical analysis review of the markets and trading systems for Breakpoint Trades. Again, my name is Matthew Frailey. This newsletter is divided into 5 major sections. Again, the same general theme as we always keep. I first discuss the, some admin comments. I'll be discussing the KISS systems, which have been killing it. Also discuss, then we'll move on to the general market indexes. We always do a top-down approach from, weekly, daily, intraday time frames. We'll look at the major indexes, the S&P, NASDAQ, Russell. Then we'll look at some important indicators such as the VIX, some breadth indicators. We'll also look at the bond market and the 10-year treasury yield. We'll also review a handful of the major sectors. We're going to look at the US dollar, which had a big pullback last week. Bitcoin also had a pretty big pullback. We'll look at commodities, precious metals, GDX, mining stocks, and of course we'll follow up with trade ideas. And I did add some new setups this week. Again, guys, it was a shortened holiday week for the market due to the US 4th of July holiday. Market was only open half a day on Wednesday, and it was closed on Thursday for 4th of July. Okay. Generally, the market is up during 4th of July week, and that was no exception. The S&P 500 gained about almost 2%. NASDAQ gained 3.6%. And the Dow added 0.7%, so it lagged. And the Russell really lagged. That's the small cap index. It was down 1% for the week. Guys, the market is just very narrow. Breadth-wise, we follow 21 market sectors, and only 10 of the 21 sectors were up. So roughly only 50% of the sectors closed positive. What it shows you is how narrow the breadth is on the market. For example, the percentage of stocks in the S&P 500 that are above their 20-day moving average is in the 40% range, while the S&P is at new all-time highs. Think about that, guys. That's just insane. Anyway, some other things. Again, besides that, like I said, the US dollar had a big pullback last week, lost 0.8%. As a result, most commodities pushed nicely higher, except for natural gas, which lost 10.8% for the week. Okay, what really benefited obviously was the precious metal areas. Gold gained 2.5%, silver added 7.2%, GDX, the miners, added 6.9%. Again, remember, precious metals are in a bull market. Okay. And DBC, the commodity index, one thing I want to point out is that it is in a large monthly and weekly coil pattern. So keep an eye on that. Cryptocurrencies, Bitcoin was down 10% for the week. And a lot of times that tends to follow the NASDAQ. So maybe that's given a precursor for the market to pull back here. The bond market, what helped the market last year was, the 10-year treasury was down. And And again, as far as the general indexes, the S&P and NASDAQ made new all-time highs, while the Dow and Russell continue to lag. Our technical opinion on the market continues to favor the move up as a wave, some sort of wave 3, with a wave 4 pullback coming at any time. Perhaps this week, following the passage of the 4th of July weekend, and of course the early weakness in Bitcoin, maybe an early warning sign. So that's our thoughts. Let's go ahead and move on. So let's go ahead and talk about the KISS systems. Again, the KISS systems are a trend following system. They're long only. These have been live since about January of 2023, so over a year and a half now. So anyway, they've been kicking ass, taking names. They do what was my goal. The market continues to uptrend and uptrend, and they will keep you in those uptrends with a stop protection, kind of like life insurance for your portfolio. Again, I know guys, like, especially these days when the market is in nosebleed territory and things are so easy, people kind of tend to glaze over when I talk about the KISS system sometimes, because their things are so easy, their accounts are doing well, they're fat, dumb, happy, and they don't think about it. But there's always something there's always a correction that will come, there's always a bear market that will eventually come, and too many people just buy a stock or ETF and they have no exit plan. So the KISS systems allow you to ride the uptrends so you don't stay out of the market, but they give you that protection. All right, you can see on just the BPT basket last Friday, all these stocks, ETFs, had new smart trailing stops: Apple, Google, Meta, all those big cap stock, triple Qs, NASDAQ, SSO, Tesla. And Tesla, for example, look at this Tesla trade. It went long back in April. This current Tesla trade on the KISS system is up 34.5%. Okay, that's not back tested. These are all live trades. Like I said, these have been live for a year and a half. So any of these trades that have occurred on the website for the last year and a half are live. They're not back tested. Okay, so that's up 34.5%. Now, if you simply bought and held Tesla the whole year, you would be up 1%. So the KISS system is absolutely destroying buy and hold. Okay, now the last trade lost 1%, but big deal. This trade's up 34.5%. SSO, current trade's up 15.6%. Last trade made 34.8%. Triple Q trades up 13.5%. NASDAQ, that's non-leveraged. Last trade made 22.5%. You can see Meta there. Last trade made almost 40%. Current trade's up about 8%. On Friday, XLE stopped out for a very minor loss, only lost 0.5%, doing its job. These others here, no new stops, but you can see they're all live, active, and some of the ones that are in cash: AVGO, Bido, etc. Again, that's the BPT basket. We have all the weekly. We have the high performance experimental coming very soon. I'm hoping this week finally. Next, image number 3. So here's some examples. Here's UPRO. That's the leveraged ETF for the S&P. I like this one in SSO in particular. And you can see this current trade's up 23.6%. You can see where it went long there in early May, and had a huge monster trade. I think it made almost 50% on that last trade from November until April. And you can see how it just went right back long, started raising no stops. Current stops up around 74.80. Next, image number 4, here's FNGU. Remember, you can, in the KISS systems, under the search area, you can type in a symbol. Type in a stock symbol, ETF symbol, whatever. And if it's a large cap stock or an ETF, most likely we'll have it. If it's $2, $3 stock, it's probably not going to be in here. Okay, we follow 750 stocks. But, this is an interesting one because the market is been led by just a handful of stocks. The breadth in the market is very, very narrow. So this is, these FANG stocks, FNGU. You can see current trade's up 55.65%. It went long on May 14th. So it just went long recently. Okay, not that long ago. What, month and a half ago? It's up 55.65%. If you did just a modest trade size, you could have paid for their website subscription for years. Anyway, last trade it made 17.7%. Here's the chart right from the website on the KISS tables. Remember, we have live charts there for the system, so you can see where the KISS system went long there in May. You can see all the smart trailing stops being raised. Current trade's up 55.6%. And you can see the last trades. The last one was a winner, and the previous one before that was a winner. Next, this image shows you, remember, instead of the daily, we also have weekly versions of these KISS systems. Okay. Now, I prefer generally the daily, but some of you who may be really busy at a day job, you don't want to even look at the daily. You want something that's even longer time frame. The weeklies will give you that. Some of these can stay long for 1 or 2 years at a time. So you can see all these nice gains. Look at these gains. Look at Nvidia. It's up 814%. AVGO up 207%, UPRO up 68.6%, Microsoft up 91%, Google up 94.5%. You could see when some of these went long. You could see back in January 2023, so a year and a half ago. Next, here's Meta from the KISS Weekly. Again, you can see it went long on January 27th, 2023, so about a year and a half ago. See, it went long here. And the weekly, again, while the daily's been out several times, 4 or 5 times during this amount, the weekly has stayed in. Why? Because, again, it's fractal. The weekly gives a little wider stops, right? That can be good or bad. You're going to give maybe back a little more profit when it finally does reverse and stop out. But on the flip side, it also keeps you in longer, So these are really good options for folks who want very little trades, but they still want that protection, where they're not going to go through a really strong correction or a bear market. You could also do both. You could do, you could take an account size and split it up between daily and weekly, your choice. Okay. Next. And image number 8. Here is another example. Here's the favorites. Remember, guys, you can set favorites. About 400 of you guys have set favorites. And when you set favorites, you get email trade notifications for your daily and weekly. Okay, so here's some of my favorites. And look at these gains on my favorites. Just following these, just killing it. All right. Again, hoping to launch the high performance experimental here this week. And guys, that's going to be an experimental version. We are going to launch a subscription service for the whole KISS systems. You're not paying for the high performance. It's simply going to be an add-on. Okay. We were always planning to charge something for the KISS systems, but we added the high performance intraday time frames as an added bonus. Okay. All right, let's go ahead and move back to the general market newsletter. So item number 9 shows the index sector table, what transpired last week. Like I said, it was a shortened holiday week. Nice gains for the major indexes, save for the small caps, which were down 1%. Again, everything's been ultra concentrated in the large cap tech stocks, 8 or 10 stocks essentially, Apple, Microsoft, Nvidia, stuff like that. Dominates the market. As far as the market sectors here, we follow 21 of them, and you can see roughly half the sectors were up, half were down. So despite the major indexes up nicely, only half the sectors were up, which shows you that concentration. You can see it here in the tech area. Technology, semiconductor, communications, services, all up strongly. Home builders, they had a week. They were down 3.4% for the week. Also, energy was weak. Currencies, US dollar down 0.8% for the week. That helped the precious metals, especially in commodities, which I'll get to. But one thing to note, cryptocurrencies, Bitcoin was down 10% for the week. While the market was up, to me, Bitcoin tends to follow the NASDAQ a bit, so that may be giving us an early warning sign of a pullback coming. So be aware of that. And commodities, you can see really nice gains here across the board, except for natural gas, which lost 10.8% for the week. But nice gains for crude oil. The index, DBC, was up 2.25%, copper up 5.9%, uranium up. Keep an eye on DBC, guys. That's tradable ETF. It's in a big weekly and monthly coil pattern. Now the precious metal area, solid gains. Look at these gains here. So I was worried about precious metals maybe having a pullback first, but honestly, it looks like now it wants to break out to a new high. Okay. Remember, this area is in a bull market. Okay. And I expect much, much higher prices in the future. For example, I think gold's going to eventually go to 3,000. That's a pretty good percentage move from here. And I think silver, we're going to see it in the 50 range eventually. That's another, big percentage move. As far as the bond market, the drop in the 10-year, 30-year treasury yields helped the market last week. Next, let's jump. Item number 10 shows the economic news calendar. So have a few things in the docket here. The main things are the initial jobless claims. Well, CPI on Thursday. That's going to be a big one, guys. We, of course, initial jobless claims, natural gas inventories. Treasury budget, well, I mean, that's just a laughable thing. I mean, Democrat, Republican, they don't seem to give a shit about, the trillions of dollars we're in debt. So I'm not even going to go there. PPI, core PPI on Friday. So another inflationary data for producers. Next, looking at the index chart, chart 11, here's the weekly view of the 5 key major indexes. Like I said, brand new all-time highs in the NASDAQ and small caps, closing up above their upper Bollinger Bands. While the Russell here continues to lag, and so does the Dow. Shows the concentration in the market, primarily in those, big cap tech stocks that are not a part of the Dow or Russell. Next, number 12, here's the daily view. Again, you can see nice move, nice all-time highs in the NASDAQ and S&P, but not the other indexes. Next, chart number 13. Now, here's what I'm talking about, guys. This very narrow range market. So this is the percentage of stocks that are trading above their 20-day EMA in the S&P 500. So all the 500 stocks. And despite the S&P being at new all-time highs, only 42.6% of the stocks in the S&P 500 are above their 20 EMA. How is that possible? It's possible because you have 8 or 10 stocks, Microsoft, Nvidia, Apple, Meta, Microsoft, which dominate the market. Okay, that's the reason. Long term, that's not sustainable. Eventually we're going to get a big old correction, but that is yet to manifest. But that is there. There's also negative breadth in some of the McClellan oscillators, which I'll show later on. Next. So again, here's why we see that, with the percentage of stocks in the S&P 500 above their 20-day moving average. You have the same thing also above their 50-day moving average. So here's Apple or Amazon. Remember, this is the long idea, which broke out in June, continues to push nicely higher. Here's Apple, another trade idea. We had it long back in early May, broke out, of course, in June. It's been making a new all-time highs here, as you can see. Again, all these are huge weightings on the market. Here's Google. Broke out in June, continues to move higher. Made a new all-time high there on Friday. Meta, boom, busted out to a new high. AMD, it's not as large a component as the others, but still breaking out of this channel I've had. Okay, logical target would be the supply zone up here. And of course, Microsoft just continues running to new all-time highs. So guys, this is why, these stocks, which are such huge weighting components of the NASDAQ and S&P, are why we see that disparity, that, lack of the individual stocks really participating with the indexes. These are skewing the indexes. And here's Nvidia. Now, Nvidia has been lagging a bit lately. If we do get a correction here, some sort of fourth wave on the indexes, I'm still favoring a pullback maybe to this wave C here on Nvidia. We'll see. Again, we have a little AB. It's possible you could add a little, this could be completed here. This could go up to a new high, but I'm still watching to see if this forms a lower high. I would love to buy it in this range. All right, let's move on. Chart number 21, here's the Dow. Again, the Dow, just like the Russell, have been lagging, you can see. So here I drew sort of a coil pattern. And I probably should show the Russell next, but I have that after the other indexes. So let's go ahead and move on to the S&P. Here's the weekly S&P, which up almost 2% for the week. Now, this MACD divergence for the weekly is still here. Okay. Again, divergence is never a sell signal. This divergence has been here for weeks. If you sold weeks ago because of the divergence, you'd have missed this move. And that's why, it's good to follow the KISS systems, because they continue to ride this uptrend on the indexes. But anyway, we're still monitoring this divergence. Next, image number 23. Here's the KISS weekly systems, which I discussed in the opening comments. But so interesting, we got new smart trailing stops on the S&P, moved up to 5170. Previous one was 5034. On the triple Qs, it also moved up nicely. Remember, these are wider than the daily, which you'd expect. We do have the Mark 9 on the weekly now, so that is definitely something to pay attention to. Doesn't mean we stall there, okay? But sometimes, you do, and these are widely paid attention to. Next, chart number 24, here's the daily S&P KISS system, okay? So we had a new smart trailing stop generated last Tuesday, moved up from 52.94 to 54.26, right around that last higher low. Very tight, logical spot for it to do so. Again, you can see, again, guys, these moving average ribbons with the BPTMA are great guides. I love when they're pinched. I love when they pinch together here. That was a great buy opportunity back in May, and even here in late June on that little pinch. Next, image number 25. Here's the 4 time frames. So here's the daily up here. Again, we're still holding the ATRs on all the time frames. That said, short term, notice some A's. That's amateur buying. This shows up on lighter volume. When things get stretched, doesn't mean you stall there, but sometimes you get pullbacks from those. Here on the 130 minute, we have an A and a DeMark 9, and we have a DeMark 13 and some A's on the 78 minute. What I'm noticing here, see the moving average ribbon? Again, they were pinched back here where you had your big launch. Now they're getting a bit wide, so that may need to be worked off a bit. My guess is this is some sort of wave 3 move up here, and then we need a wave 4 pullback soon. Next, going back to the standard charts, here's the S&P daily, just a clean chart, just showing this uptrend channel from that April low. Again, we continue to power up. Maybe this upper channel line would be the next target. Clear support areas are the 9 EMA, 20 MA, and of course the uptrend channel line. MACD divergence here isn't erased yet, but on another move up, it could be negated. Okay. RSI divergence is essentially erased. Next, chart number 27. Here's that daily S&P chart I showed last Monday. This kind of rising wedge pattern. We're working on this wave 3. Again, you can see we're a little above this trend line. I didn't bother adjusting it. Like I said, what I'm still looking for, if we get a pullback in here, I'm looking for it to be some sort of wave 4. And again, I don't know if it's going to be this deep or not, but that's just a possibility. Again, we could just continue to move up here, but if we get a pullback right in here, I'm looking for it to be some sort of wave 4. This shows an idealized thing where you'd break the little wedge, back test it, go down, and then rally up again to a new all-time high. Next, chart number 28. Here's a clean daily S&P. Again, like I said, we view this as some sort of wave 3 at the moment. When we get a correction, it'll be some sort of wave 4. Image number 29, here's the half-day chart. Like I said, shows you the same thing, this breakdown. We're reviewing this as some sort of wave 5 of 3. Okay, so once this ends, we're looking for a wave 4 pullback. Remember, this would end wave 5 of 3 once it ends. Notice the RSIs are getting quite overbought here. We do have a little MACD divergence. Usually when the RSIs get like this, that's usually indicative of some sort of wave 3. Chart number 30, here's the 60-minute chart. Again, just you can see that big launch we had last week. Again, to me, that looks more like a wave 3 action, right? And needing some sort of wave 4 pullback soon. Next, chart number 31, here's the triple Qs, KISS system daily. Again, we got a new smart trailing stop generated on Friday, moved up from 467.80 to 479.50, so nice jump. It's very tight now. Again, you can see how the system's done extremely well. And here's a great example of the system going, it went long in October 31st of last year, caught that whole uptrend in the late fall in the April time frame. Then it went long again. Then it stopped out in end of May. And then it went long a couple days later. So it righted itself. And that's what the KISS system can do. Sometimes it may have not have been the best to get out, but a lot of times it'll just get right back in. And that's what it did well. You can see the current stop. Even if price were to come down and hit that, it's still nicely above that original or that last entry. Next, chart 32, here's the 4 time frames. Again, just like on the S&P, ATR is support on all the time frames. Moving average ribbons are getting a bit wide here on the 130 minute. You can see the DeMark 9 there and the 78 minutes. So things are quite stretched here. Maybe indicative of some sort of wave 3. Maybe need a mean reversion consolidation soon. Chart 33, here's the daily SQQs. Like I said, this has been one of our accounts, wave 4, working on a little wave 5 here. We still have a little MACD divergence here at the moment. Chart 34, here's the half-day chart. Again, just continue uptrending, made a new high last Friday. We do have some MACD divergence, which has my attention. Chart 35, here's the 60-minute chart. And finally, chart 36, here's the small caps, Russell 2000. Like I said, you know, they've been lagging all year. It doesn't contain any of those FANG type stocks. This demand zone, we found support here, but price is just chopping around here, still unable to get going. Again, when the market does eventually maybe has that wave 4 pullback and then rallies again to a new all-time high in a wave 5, then I think maybe the Russell will play catch up and we'll see it eventually break out of this. But for now, it's still stuck. A couple other things you could watch is this nice trend line on the RSI. These trend line breaks in the RSI tend to be very reliable. You could see some past examples. This was a good short signal back there in August, you know, early on that head and shoulder pattern. And you had a buy signal here on essentially beginning of November on that trend line break. So that's something to watch. If this RSI can eventually break that, I think that could be a good buy trigger. But for now, it's just stuck in this range. All right, guys, that does it for the indexes. Let's go and move on. So let's look at some indicators. Here's the VIX, which with a few different things on it, such as the VIX, the VVX. But one thing I'm pointing out here is on the VIX, Bollinger Bands are getting tight here. You see how they're really coming together. And price did bounce off the lower Bollinger Bands last Friday, despite the market being up. So the VIX was up and the S&P was up. Sometimes when you get that, the next trading day is a down day. So we'll see if Monday ends up being a down day or not. So just be aware of that. The VIX is down here near the support with the Bollinger Band starting to pinch. Here's the other daily chart of the VIX. Like I said, it's in this demand zone, which has been, you know, holding for the last month or so. And chart 39, here's a 60-minute chart. Remember this support zone I talked about last Monday? We got into it and we bounced off of it. Like I said, the market was up on Friday strongly, and the VIX was up 3.25%. Usually that doesn't happen. Next, chart 40, here's the S&P McClellan oscillator. Again, like I said, S&P is at new all-time highs. The McClellan oscillator is stuck down here. You can see, you know, it's well below its early May highs. It's kind of similar look to the percentage of stocks in the S&P above their 20-day moving averages. You know, it's lagging. It shows you that negative breath. It shows you the effect of those group of stocks, tech stocks that have been leading the market. Here's another one to watch. This is the NASDAQ volume McClellan oscillator. So quite interestingly, again, this tends to follow the market, you can see, right? But one thing I'm noting here is a little divergence showing up. You see how this peaked in June and it has a lower high so far while the NASDAQ itself has a higher high. Some other indicators, guys, these aren't affecting the market right now, but I think they will in the future. Maybe, you know, 6 months from now, whatever, early next year. The unemployment rate. So the unemployment rate, as you know, it's been very low, but it's been moving slightly higher. But this is the unemployment rate, the monthly, with the 5 and 13 EMA. You see that? And notice that these moving average crosses, and I'm not usually a fan of moving average crosses, but you can see how they tend to do very well. Whenever these moving averages cross, you usually establish a trend that lasts for years. Why is that the case? Unemployment rate is not like a sports car. It can't turn on a dime. It's like a barge. It's very slow to turn, and it, you know, makes these long trends. You know, it oscillates in these big up and downs. All right. Well, the fact that the moving averages crossed a couple months ago, to me, shows that this is now starting an uptrend that could last for a couple years. I think that'll start our next recession, guys. Okay, we're just seeing early signs of it here. So chart 43, here's the unemployment numbers, and you can see the same thing here. Okay. Next. Another chart that I've been showing is the S&P 500 versus the high yield corporate. I've been showing this divergence, but I said that it could have been negated, and it actually technically was negated on Friday, with the S&P making a new high, but high yield corporate made a new high as well. So this divergence is now negated. Remember, these two are always good to watch together. They're highly correlated, as you can see, but this divergence was negated. Moving on to the bond market, chart 45, here's TLT 20-year bonds. It did bounce off that support level last week, which helped the market. That helped rates drop. Chart 46, here's the 10-year Treasury yield daily, still in this downtrend channel-like pattern. Okay, if rates can start pulling back more, that would help keep the market aloft longer. And chart 47, here's the weekly. So the weekly is this in the big coil pattern. Again, this could go either way. Now, if this were to break this coil to the downside, you can almost see this slat and head and shoulder pattern. It's not really textbook, but you can see what I mean. That could start a drop for the interest rates here. Again, they're not going back down to these levels, guys. All right. Interest rates are now in a secular bull market, but they could pull back into this range. That would help propel the market much higher as well. So let's see what this does. It is coiling, energy is building. Moving on to the market sector, chart 48, here's technology. XLK made a brief new high on Friday. Now there is some RSI and MACD divergence setting up. Remember, this is dominated by two stocks, make up almost 44% of it, just two names. Chart 49, here's semiconductors. Now this hasn't made a new high. This is of course dominated by NVIDIA. Chart 50, here's financials. They're still in this coil pattern, which I showed a week ago. So still in that pattern, we're still watching that. Chart 51, transports. Remember, they've been lagging since March while the market's been making new all-time highs. This is not. Still stuck in this range. Chart 52, here's FedEx. That's in your transports area. This isn't a long idea we put out a couple weeks ago when we were talking about the transports. It did very well. So I know at least a couple of you caught that trade. Chart 53, here's home builders, down 0.8% on Friday, down over, I think, 3% for the week. This broke its support last week, and then leaking oil here. This is your demand zone down in here, so down around the 200-day moving average could be an area where it finds support perhaps. Chart 54, here's healthcare, still holding up here. You can see how last time it sold off from that resistance area, double top area. Chart 55, utilities, still in this downtrend channel, still below the 20 and 50 moving averages. Chart 56, industrials, stuck in this horizontal range. This is a kind of a weak support. If it loses the support, it may have a quick move down to the 200-day moving average, so watch that. Chart 57, here's utilities. I think I just discussed this. Again, it's below its 20 and 50 EMAs here, still in the downtrend channel. Chart 58, here's XLE Energy. Remember, nice rally off that 200-day moving average. Broke out of the channel, but pulled back. Now it's back testing the channel line. We'll see if it finds support there or not. Chart 59, here's XOP. That's S&P 500 oil and gas exploration. Now this did not break out of its channel, but essentially rallied right up to its 50-day moving average. You can see how it's right on that trend line, 50-day moving average in red, pulled back from there. Chart 60, ExxonMobil, the big one, also pulling back here, still a ways from that last low. And here's oil services. This is the weekly chart. Like I've been stating, if you are long this, to me, a long-term stop could be trailed up below this uptrend, this weekly uptrend line. All right, let's move to commodities. Chart 62, DBC, that's the index, up 2.5 or 2.25%. This is on my watch this week, guys. It's in this, year and a half coil, and it's testing the coil line. Let's see if it breaks out or not. Remember, this is a tradable ETF. Here's the monthly. You can see the coil. Moving average ribbon is pinching. Remember, this area is in a bull market. It's been consolidating now for essentially a year and a half. Chart 64, here's crude oil. Nice rally the last 4 weeks. Still under this trend line here, I drew a coil. So we got a pretty obvious coil setting up here. The 200-week moving average, you can see that's been a nice long-term support guide. Chart 65, here's the daily crude oil. Again, nice rally off the demand zone back in early June. Rallied up to the supply zone where now it's struggling a little bit. Chart 66, natural gas down 10.8% last week. So big drop. Chart 67, here's the daily ETF UNG. Just continues to melt down. The next support demand zone's down here. So, you know, wouldn't be surprised if it goes there now. I don't really see any divergence at all. You can see how the 200-day moving average stalled those last 4 rally attempts at it. Chart 68, copper up 5.9%. Big rally off that 20-week EMA last week. Chart 69, copper on the daily, nice rally as well, recovering that 50-day moving average, which it previously lost. Chart 70, here's DBA agriculture. Again, once again, held this demand zone. That's been a big support area. Again, it's still got overhead resistance at the moving averages now. That said, I do believe this is a bullish long-term consolidation. Here's the weekly chart. To me, this looks like a big ABC. You know, it had broken out of this cup and handle early in the year, which played out, but this may be setting the stage for the next big rally. Chart 72, here's DBA on the 2-hour. Basically, you can see how it came right into that support zone with some MACD divergence and rallied off of it. Guys, if these commodities rally and break out, that's not going to help the inflation front. All right, let's go and move on. Chart 73, Bitcoin, been leaking oil here. It was down 10% last week. You can see it did have a quick flush through that support down near that. It got near that demand zone here where it bounced. But this is an area to watch, guys. Here's the Bitcoin short, BITI. It's at this nice long base. I'm still long some of this, been patient with it. It's testing resistance again. If it can clear it here, I'm looking for a move at least to this supply zone up here around the 10.5 range. Chart 75, US dollar starting to melt down here. That's been helping precious metals and commodities. Here's the weekly down 0.94%. Still in the weekly coil, but it's leaking oil a bit in the coil. Here's the weekly euro. Remember, it was at support, so it's rallying off support. Again, it's going to move opposite to the dollar, so this actually looks bullish. This breaks out of here, then the dollar's likely to break down. One thing I'm watching is the Japanese yen. This has been absolutely in the toilet. Here's the weekly. Just continues to trail down here. But if that US dollar starts to rally, maybe this area will finally bounce. Those of you looking for catch a falling knife, maybe that'll give you a mean reversion trade. Here's the FXY in the weekly. Again, look at this weekly. You can see the rounded top back here in 2013, head and shoulder. Big coil pattern here. This was like a 5-year coil that busted down in 2021. Right now you have a falling wedge here with MACD divergence, RSI divergence forming. So this could be getting to be contrarian levels where if the dollar sells off, this may be finally bouncing. I did buy a little bit here, but again, guys, it's kind of like catching a falling knife, so be careful. And let's move to precious metals. So chart 80, here's gold. So gold, I've been worried about it pulling, maybe losing this support here and pulling down on this demand zone. I really wish that had happened, but instead it's starting to broke out of this little pattern last week. Now it isn't back to the highs. Again, could it still form a lower high here? Yes. But it's been consolidating a long time. Sometimes a long enough consolidation can work off the overbought. Again, gold is in a long-term bull market. Remember. Chart 81, here's the daily. This one has the GDX-GLD ratio. And so the stocks outperformed last week, which is a positive. Okay. Chart 82, here's the weekly, up 2.5%. Early this year, you could see it broke out of this big multi-year ascending triangle pattern. Chart 83, here's gold on the weekly. Again, to me, we've been in a wave 4 consolidation, and this is a minor wave 4. You know, this is a nested 1, 2, 1, 2, 3, 4. So if this is the pattern, guys, this would support my target of $3,000 on gold over time. Here's the monthly. Again, this is kind of wave, I've had this drawn since last year. Wave 3, 4, 5. I think eventually we go to 3,000 or higher. It's in a bull market, guys. Not surprising given all the money printing and trillions of dollars and billions of dollars given away every day by the market, by the government. Chart 85 here is silver. Nice pop out of this channel last week. Remember, it held that 50-day moving average essentially. Chart 86, here's the weekly, up 7.2%. Remember, early this year, it broke out of this ascending triangle that I liked. Textbook ABCDE coil. Here's the big picture chart of silver. Now, this is a quarterly chart going back to 1970. So remember, in 1980, you had the Hunt brothers cornered the silver market, just like the Dukes. Remember that great movie Trading Places in the early 80s when they tried to corner the frozen orange juice market and they got their butts handed to them? Well, same thing happened with the Hunt brothers back then. Silver hit about $50. It then took all those years for silver to hit $50 again in 2011, topped it out. And I think silver's going back to here. But if you look at this chart, doesn't it look like sort of a big ascending triangle? I mean, if that's the case, I mean, shoot, could silver go to $100 eventually? Who knows? But it looks bullish long term. Remember, this is a big, 50-plus year chart, guys. There's the other quarterly chart. This is the linear chart. Next, chart 89. Here's GDX, the miners. So they did break out of their channel finally last week. Nice follow through the last couple days. They're still not back to the highs. Chart 90, here's the BPGDM. Now just realize, guys, this has been a great system, the BPGDM Ringco chart. It gave a buy signal on March 1st there. These have been excellent buy and sell signals. It gave a sell signal there in June, and then it gave a buy signal last week. But this only pulled back from the upper 80s down to around 80% or high 70s. So this didn't work down to oversold. So perhaps this next run, if we get a new high on GDX, it's not going to be a big run like this one. Okay, maybe it'll be some sort of wave 5. Next, looking at some individuals, CDE, this is a silver stock I put out last week as a coil. Broke out nicely on Wednesday and Friday. You can see, nice coil, was just textbook right into the 50-day moving average. Some others. Chart 892, here's AG, another silver stock. This is one I was looking to buy. I bought some down around here near that 200-day moving average. To me, it had a perfect ABC pullback, look lower risk. Here's the weekly. So you had this falling wedge, weekly wedge, but it broke out early this year. We stalled near that supply zone, first supply zone. You can notice this perfect ABC. Moving average ribbon's now pinching on the weekly. I think this eventually goes, and I think it eventually targets this upper supply zone. This would be more than a double from current prices. Chart 94, here's EXK. It's a silver stock, also breaking out. By the way, guys, we had this along back here on March 1st, down here in the $1.50 range. Think about that. Look at all these other moves. Been a heck of a percentage move since then. And it's breaking out now. I think it makes a new high again. Here's the weekly. Again, you can see it's kind of flagging on the weekly. Last time it stalled at the first supply zone. Now let's see if it can eventually go and break through this. Chart 96, pause. Here's another silver stock that I like. I liked this earlier in the year. Stalled at the supply zone. You can see there in May. Now it's attempting to test this area again. I think longer term it attacks this next supply zone. Here's some others. AU, Anglo Gold, broke out huge on Friday, as you can see. What does the weekly look like? The weekly breaking out of this weekly coil pattern that I showed earlier in the year. Chart 99, here's Newmont breaking out of a tight coil pattern on Wednesday and then following through on Friday. And here's the weekly. You can see how the weekly found support in February at the 2020 lows. And this looks good too. So there's some stocks for you guys. Finally, move on to the last part of this newsletter. Chart 101, here's Tesla. It's been on our watch list here since mid-June off this trend line break. Look at this move. Hell of a move. And of course, the KISS system has caught this. That said, this is getting very extended. Look how wide the moving average ribbon is. See how high the RSIs are? RSI 14 is over 90% now. That said, this is more indicative of a wave 3, okay, not a major top. So likely this pulls back sometime soon as a wave 4, then maybe get another move in a 5. Notice there's no MACD divergence here, but it is very, very extended. Chart 102 Ford was also a good idea of ours out of this coil. Actually, Morton gave it to us, but we put it on our newsletter. Rivian's also done well from this inverse head and shoulder pattern. There was a big investment, I think, by Volkswagen on that gap up. Chart 104 Grind was also a great trade on this trend line break. It's consolidating at the moment. Chart 105 STVN. Here's one I put out over a week ago, this wedge. It had an initial pop. I think you could go long now with a stop right here at the higher low, guys. Chart 106 AMT, American Power. It's been on here for a while. I'm still watching this. It's consolidating nicely here now. Chart 107 Quad M, Triple M, or 3M. Still in this coil pattern. This could break either way. Chart 108 MDGL. It's been on the watch list for a couple weeks now. Kind of a basically looks like a coupling handle, and you got a tight coil within the handle here. So watching this real close. Here's some new ones. Kava, little ascending triangle pattern, resistance 97.65. Chart 110 BTBT. It's a crypto type stock breaking out of a flag here. Chart 111 CrowdStrike, tight coil here. And chart 112 Iris Energy. Guys, this was the long ideas back here of ours in May. Actually, it was given to us by one of our subscribers. We put it on our list back in the $5 range. God, the thing went up more than doubled, and now it looks like it wants to break out again. Finally, guys, here's some great dividend plays. A lot of these pay monthly, and they've been very consistent, paying for 10 and 20 years. Main Street pays monthly, pays about an 8 to 9% dividend. The next dividend or ex-dividend date is July 8th, so you needed to buy this last week. So Monday's too late. That's the ex-dividend date. Remember, this pays monthly. Chart 114 DSL is another nice monthly dividend play. Next one is 714. This pays about a 10.5% annual dividend. Chart 115 OXLC pays about a 19% dividend, so very high dividend. It's a low price stock. This goes ex-dividend on 7/17, so you have time to buy it. Chart 116 NUSI, another dividend play. This is a nice, what you call a, how do you call these? But, you know, plays NASDAQ 100 stocks and sells covered calls and buys puts for protection, and it pays monthly. It has a very high percentage rate. And AMZA, another one. This pays about a 13% annual dividend. This will be coming up maybe in about a week or so, will be ex-dividend. All right, guys, that'll do it. We'll see what the market does this week. Let's do a quick check on weekend futures. These are just a guess. These are weekend betting futures. They're not actually real futures. This is over in the UK. So it shows the Dow's up 14 points, so it's essentially flat. All right, guys, have a wonderful rest of your Sunday. Thanks for your support. Take care.